Have you noticed lately how the rising cost of living has affected how far your dollar goes? In this video, I'm going to share with you how investing in stocks not only preserves your purchasing power and keeps up with inflation, but actually grows your wealth in excess of inflation. I remember when I was a kid, my grandma telling me she could go to the movies for a nickel. That was impossible for me to conceive. I thought she must be either making it up or she'd been alive since the dinosaurs. But the longer I've lived, I realized that it's just a matter of time till everything costs a lot more than it used to. The cause of this difference is inflation. Over time, inflation causes the value of money to decrease. It can make it more difficult to afford basic necessities such as food, housing, and transportation. It can also erode the value of your savings and investments. As a financial advisor, I've been helping people manage their investments over the last 30 years, and we've seen a lot of inflation. But one thing that's always held true is that a diversified portfolio of stocks, such as the S&P 500, has outperformed inflation over the long term. Let me show you what I mean. $1,000 invested in the S&P 500 in 1926 is worth over $10 million today. Compare that to the erosion in the purchasing power of a dollar over the same period of time. The takeaway is we have to protect our money against the rising cost of living, and a great way to do that long term is by investing in a diversified portfolio of stocks, such as the S&P 500. The S&P 500 is a stock market index that tracks the performance of 500 of the largest companies in the United States. It's been around since 1926, and over that period of time, it's averaged about 10% per year. The S&P 500 is a diversified index. It's invested in a wide range of companies across diversified industries. This helps to reduce risk and protects investors against losses. There's no something for nothing in this world, and if you want to enjoy the higher returns that stocks deliver over time, the price to pay for that is to be prepared to endure the significant short-term price fluctuation that the markets exhibit along the way. There are a few things you need to know before you invest in stocks. First, you need to understand the risks involved. The stock market can be quite volatile, and just like real estate, if you sell it for less than you paid for it, you'll lose money. But if you hold on to it long enough for it to go up as it has historically over time, that's how you make money. Second, you need to do your research. Before you invest in any stock or fund, you need to learn as much as you can about the company. Further, you need to be patient. It's important that you approach stock investing as a long-term investment. Don't panic when the markets periodically take a dip. Just stay the course and you'll be well on your way to achieving your financial goals. If you're the kind of investor who would like help selecting and managing your portfolio over time, that's the service that we provide to our clients. Click the link in the description if you'd like to set a time to consult with us. To learn more about investing and retirement planning, watch these videos next.